Yo, what's up, everybody? It's Monday, May 19th. How's everybody doing? You know how sometimes I say, I don't have a lot to talk about? And then there's times like today when there's so much. I mean, the media just overflowing with things that I could talk about. The economics profession just overflowing with things. It's like a bonanza today, it's like a party. So this might be a little bit longish, this video, just letting you know. So today we came into the market and everybody was freaking out over the Moodys downgrade. That I can do multiple videos on that. You know, I started talking about that last week. I gave a little personal anecdote of the last time that happened with Standard & Poor's back in 2011. You know, the thing to understand there, really, if I'm going to break it down in its simplest message, it's just that the rating agencies are idiots. It's just the height of stupidity, okay? When you have, when they're putting out ratings on sovereign credit, and they're looking at a country like the United States where all of its liabilities are denominated in its own currency, the US dollar, there is zero risk of insolvency. Now, I will say that, you know, Congress plays around and does their games of brinkmanship every time we got to raise the debt ceiling, but they end up raising it. But just in general terms, there is zero chance that the United States will not be able to meet its obligations, which are denominated in US dollars. All right, that's just a simple, pure fact. And that these rating agencies, these stupid, idiotic rating agencies, put out this unnecessary scare tactic, you know, like S&P did in 2011 and like Moody's doing now. I mean, that it's irresponsible. It's the height of ignorance and stupidity. It just speaks to their arrogance. Don't forget, like, these are the same guys I said that, you know, back in 2005 and 2006 and 2007, they were rating all that subprime mortgage junk at AAA. I gave you the story of my short time at Standard & Poor's, where I worked actually in the structured finance division. And, you know, these guys get paid by the issuers of these securities. I mean, S&P, Moody's, Fitch, they get paid by the issuers of these securities to rate the securities. So what do you think they're going to do? How do you think they're going to rate them? As junk? This is how they make their fees, okay? Now, the United States doesn't pay Moody's or S&P or Fitch, so, like, I guess they feel free to do some stupid type of downgrade like this, which is completely meaningless. But the other thing I want to mention, not so much even the rating agencies, because you should, if you're like a halfway intelligent person, you should completely discount what these guys say. But the other thing, which I think is important to say, is that there are lots and lots of people, including many high-positioned people in the financial industry and Wall Street, who, you know, take this as gospel and they go out there and they double down on it. You know, they spread it around. They cite it, they talk about it as if it is, you know, some kind of deep truth that cannot be refuted. And it's just like you see the reaction on the part of investors. I mean, we were down like overnight, and I looked at the market overnight, it was like down like 400 points. I'm like, what the heck is going on? Did a war break out somewhere? Did Trump say something about the tariffs, that he's going to raise it to 300% on China? I'm like, what the hell is going on? And then I see like, oh, everybody's freaking out because of the downgrade. I mean, so like the market ended up, all right, NASDAQ was down a little bit. S&P eked out a gain. The Dow was up like 100 points or something like that. So that was the good news. That's what should have happened, that the markets blow this off. I mean, the initial reaction, which I always tell you guys, to go against people who trade off of headlines, because the people who trade off of headlines, they think they're doing something smart. They're not doing something smart. They're dumb. They're emotional. They don't have a process. Remember, I spoke about that last week. Having a process is very, very important, and being disciplined and sticking to that process. They're jumping in and out. They're short-termers. And so, like, these are all traits. These are all behavioral traits that you want to go against. And when you see stuff like that, when there's a headline, which is a totally, first of all, it was meaningless. And again, it was based on a completely erroneous and flawed understanding of sovereign credit, at least where it applies to a country like the United States, which is a currency issuer and where all of its liabilities are denominated in its own currency. I mean, when you see stupidity, you have to go against that. I mean, over time, I've said this in the past, like if you have no other approach or strategy than to just go against stupidity. I mean, you see this in life. Like if you see stupid people, what do you say? What do you say to your kids? Like, kids, don't do what that guy's doing. Or you see what that person's doing? If you want to get ahead in life, do the opposite. I mean, we all know this intrinsically when it comes to life and when it comes to how we conduct ourselves. But the funny thing is, like, a lot of people don't follow this when it comes to the markets. It's like the same thing that I talk about where people love to buy high and they love to sell low. But when they go to the store, they only go there when there's a sale, when they can buy low. So, I mean, it's just one of these oddities of behavior that's kind of intrinsic to investing for some reason. I don't know why, but that's the way it is. They panic out when everything's on sale, and then they're trampling all over themselves, like, you know, Black Friday after Thanksgiving, trying to get into Walmart to get the thing that's on sale, and they're just trampling all over themselves. But in this case, the things are not on sale. They're very, very expensive, and they want it even more. So I don't know. Now, the bond market, here's the thing. And I've said this, and I'm going to say it again. Jerome Powell, for some reason, has decided that the Fed's fight right now is an inflation fight. And that's coming despite all the recent data that we've seen, the decline in oil prices, CPI, producer prices, despite all of that stuff, personal consumption expenditures, you know, all that stuff. He is stuck. Now, I think, I've speculated that I think it's a personal vendetta against Trump because Trump is publicly criticizing the guy, and the guy, you know, he's a professional. He's an adult professional. He's built a nice career for himself. I don't think he enjoys getting publicly humiliated by Trump. And I think that's something personal going on there. I could be wrong, but I think that's what it is. I know, like most of us, if that was happening to us, it would be hard to stay cool. You know, we'd want to get something back on that person. The other thing I think, and again, this is my own speculation, is I think he's doing this he's got plenty of hedge fund buddies, you know, like Drunken Miller and Paul Tudor Jones and Gundlach and all these people, you know, that from what I understand, they're short the treasury. I think he runs cover for them because I think he's looking past his Fed post. He's not going to be reappointed by Trump, that's for sure. And he's looking for a position in one of these hedge funds at, you know, 7 figures. Easily, he'll get it. and that's my speculation. You know, I don't know if that's true or not, but that's what I think. Okay? So the bond market, which again, there's no reason at all for treasury yields to go up because of this Moody's stupid downgrade. Because again, there is zero, like I said last week, like if you look at Germany, if you look at Portugal, if you look at Italy, if you look at Spain, if you look at Greece, if you look at the Netherlands, all these Euro area countries, they're a joke compared to the United States. They're basket cases, they're economies, but most important is the fact that none of these countries that I just mentioned are currency issuers. They all use the euro, which they don't issue. The ECB does that. So there's infinite risk of insolvency in those countries if things went bad and if the ECB decided not to step in. You know, the ECB is kind of acting like a de facto fiscal authority there. All right? They did that in Greece in 2010. They said, okay, those bonds were freaking collapsing. They were evaporating. They were going up in smoke until the ECB stepped in and said, okay, we're going to back these bonds, but they did it with conditions. You're going to have to impose austerity and this and that. It's up to the ECB. It's not up to Germany or Portugal or Italy or France or Spain or Netherlands or Greece or any one of those. And the fact that those bonds have lower yields than U.S. treasuries of the same, duration is simply because the ECB has been very open in stating that we're backing those bonds. Whereas in the United States, the Fed is like, oh, we got to fight inflation. And you know what that means? That means to them, to the Fed, and to all monetarist, orthodox followers of monetarism, which is like basically every central bank in the world, the Fed is like, we got to have to raise interest rates, or the threat of raising interest rates is hanging over the market. That's what's keeping yields up. It's not this stupid freaking Moodys thing. All right. Now, today, I was curious. All right. Because I'm like, all I'm hearing out there in the media is like, foreigners are selling our bonds and nobody's buying our bonds. America First is gone and all this stuff. I'm sure you're hearing it too. That's all we're hearing. That's all we've been hearing. So I got a little curious. I keep a record. I keep a database of the Treasury releases every month, but it's actually, it lags by like 2 months. But they released a list of foreign holders of U.S. debt, U.S. treasuries, okay? Country by country, quantity by quantity, all right? And I have a database that I've kept over the years in an Excel spreadsheet. So today, I'm thinking, I haven't checked that in a while. Let me go see what that looks like, because all I'm hearing is that everybody's selling treasuries, that the whole world, they don't want treasuries, right? So let me go look at that. So I went to the website, and by the way, that's a free, that's at the Treasury. It's free if you know where to find it. Anyone could find it. If you want, my graph, just go to my website, pitbulleconomics.com, sign up for a 30-day free trial to MMT Trade. I'll send you the graph and I'll send you the link. I'm not going to put that up here. So I went there today, and guess what? Foreign holdings of U.S. debt is at an all-time record high of like 9.05 trillion. And that is through the end of March, just March this year. Okay, so it's like a month and a half behind. 9 trillion, and not only it's at a record high, it shot up in March. All right, now maybe you might say, well, Mike, let's see what happens in April. Let's see what happens in May. I'll say, fine, I'll wait. And we'll do this again. I'll come back again. You know what, May. So like in June, when that May data is released, I'll come back again and we'll look at it again. But it's going to be going up. So number one, this whole thing of foreign, and by the way, every single country on that list that I saw, with the exception of China, which liquidated a little tiny bit, like 20, I think maybe 20 billion or something like that. But every other country, Japan, the UK, Saudi Arabia, Switzerland, Canada, blah, 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 all the way down the list, they all added treasuries, okay? So that's number one. Number two, this year so far, this fiscal year, okay, we're into so what? October, November, December, January, February, March, April, and then May. 7.5 months. Treasury has issued like 19.5 trillion of securities. 19.5 trillion of securities have been issued. That is up 1.7 trillion over last year. So remember, in order for the U.S. to sell any bonds or notes, oh, by the way, let me make one quick, let me say one quick thing on that thing with foreign holders. You want to know what else was cool about that data? That foreign countries actually sold T-bills and bought more bonds and notes. So you can't even argue that, oh yeah, it went up, Mike, only because they're buying like the shortest term, least risky, inflation averse. That's why no, they actually they reduced T-bill holdings and they bought more bonds and notes. Okay? The other thing that I was just saying, so 19.5 trillion of issuance so far this year in 7.5 months. That's 1.7 trillion more than last year at this time. And again, what I was about to say is that the government cannot sell any securities unless the dollars already exist in the system, because you can only buy government securities with dollars. So the dollars have to be put there before anybody can buy a treasury. It's like you can't play the Monopoly game until the game distributes the money, right? You can't drain a swimming pool until the pool has water in it, right? So what does this tell you? I'll tell you what it tells you. It tells you that the media is gaslighting you on this stuff all the time. You are being gaslit on all of these, items. On America last, nobody's buying our treasuries, foreigners are dumping on treasuries. The media and the economics profession is completely gaslighting you. And you're going along with it. Now, nobody tells you this except me. You cannot go anywhere else. If you go anywhere else, you're going to hear the usual claptrap, which is, foreigners are dumping treasuries and the U.S. can't sell any bonds and, all this crap, which is just patently false. It's a lie. They're gaslighting you. Maybe they're not gaslighting because gaslighting, the underlying meaning of gaslighting is that, they're doing it on purpose. They're trying to fool you. I think it just comes from sheer stupidity that comes from the media and the economics profession. By the way, I got friends, I'm educated as an economist, all right? I went to University of Pennsylvania, Wharton, and then I went to UCLA. I have a degree in economics. I got friends who say to me, Mike, my son or my daughter is in college right now and they're studying economics. And I'm like, why? Why are you letting them do that? I mean, why? Are you want them to be stupid? Do you want them to be stupid? Because I think it would be much better if you send them if they go to a trade school and learn a trade like plumbing or become an electrician or an HVAC technician. They'll make a lot more money and they'll be much happier. I mean, why in the world would anyone send their kid to college to study economics when it's pure garbage what's being taught in our universities when it comes to economics? I mean, it's a disgrace. I had a conversation with a friend of mine today. We were talking about this gaslighting by the media. And he said to me, well, you know, it's not just in financial stuff. It's not just in economics. It's in everything, which I agree. And I said that journalism has become an illegitimate profession because it's not fact-finding. It's not reporting. It's dogma. It's opinion stated as if it is fact. It's dangerous. And I said, it's not just journalism, it's economics. It's economics. It was just probably worse because, like, you know, what did Keynes say, the famous quote? Like every, you know, guy who thinks like he's beyond the influence, you know, and he's too smart, I'm paraphrasing, he's really at, you know, at the whim of some defunct economist, or he's really just following some defunct economist. It's like exactly what we're seeing in policy all over the place right now, all over the whole entire world. It is a dangerous, stupid, and illegitimate profession. So anyway, I'm going to end with that. And have a great evening after that, right? No, but seriously, come on. Don't let yourself get gaslit. Please like and subscribe and go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. I'll send you that graph and I'll send you the link to the Treasury's data. If you don't believe me, I mean, it's out there. This is public information. I'm not making it up. It's not like I have some secret, you know, inside information that nobody knows. It's out there. You do it yourself. You can start keeping your own database. It's fun. All right? Okay, bye.